S&P 500 just shy of all-time highs. Now, what's going to happen when that happens could happen this week. This is technical analysis of the stock market's update and forecast for the week of August 17, 2020. Hello traders, I'm Richard Graham. Thanks for joining me. This is the S&P 500 looking at those all-time highs right here at this red line we last saw right around February 19th, and here we are. We could hit these all-time highs right around 33.94. Before then, we could see a pullback. We did see some sort of a hiccup earlier last week on August 11th. Big sell-off. A lot of people got scared out of the market. A lot of stops were pulled. So we hit this trend line, this yellow trend line that I had drawn before that acted as beautiful support. This trend line actually started in mid-June, and it acted as a resistance a few times in July, and then we finally broke through it here on August 4th, and then it acted as a beautiful support here on August 11th. And it could act as support again, of course. If it does blow through that area of support, we do have a lot more support right around 32.75, where we've seen multiple touches, acted as resistance, and blew through it on August 3rd. Previous resistance right here at the island reversal acts as support. So we do have more support here at 32.33, 3200. More support here, multiple touches of previous support back in July at the 31.25 level. And of course, this upward sloping trend line here also in yellow could provide some support as well if we do get down to those levels. So we've got a lot to get through before we can start to say that things are turning around. However, we do have that big red line sitting right there at 33.94. That's the all-time high. Everybody knows about it. Everybody's looking at it. And so that's why we've seen somewhat of a pause here. I do expect we'll bounce off it a couple of times before we break through it, if we do break through it. So everybody's staring at that line. But if we do break through it, I do expect us to come down and retest it. Should I take some profits here? Absolutely, you should take some profits here. You know, all-time highs are often points where we do see some resistance. And even if we do break through it, chances are that we will come back and retest that area. So you'll have an opportunity to get back in. And then from that point, you can look to see if there's some type of continuation pattern. But if we get through these all-time highs, it's going to act as really strong support. Right now, it's acting as really strong resistance. So going long at this point in the market could be considered risky, especially considering all the fundamentals in the market. Seasonally speaking, this is not a great time for the market. Here we are in mid-August, and usually from this time until the end of October, seasonally speaking, is usually the worst, most volatile times for stock markets if you look back over time. Doesn't mean it's going to be that way this year, but just this time of the year is usually not a favorable time for the stock market, starting from right about now through the end of October. However, we are in a presidential election year. That's usually positive. Doesn't mean we're going to not have some hiccups. And then usually leading up to a presidential election, as we saw in 2016, we had quite a sell-off for 2 or 3 months and a lot of volatility. The VIX shot up right before the 2016 election. So we're probably going to see a lot of volatility because a presidential election often brings a lot of uncertainty. A lot of people are buying and selling. And during that time, we could see some really sharp sell-offs. So we do have this major resistance that we're coming into, and we may or may not break through it. If you look at the severity of the sell-off that we had in February and March, we lost a third of the stock market's value. That is some damage that really the only way that you can overcome that is to overcome those all-time highs. So this week is probably going to be the week when we really determine where we're going from here. The bullish scenario is when we break through from here, we could really go into a strong bull market because that is going to be the test that everybody's looking at. Now, where would this money come from? It comes from the Federal Reserve, right? All the quantitative easing they're doing, they're creating money out of thin air, and they're pumping it into markets. They're buying all types of jump bonds and corporate bonds, and So the Federal Reserve has our back right now. And that's not to say that that's going to save the market, because, you know, the Federal Reserve has tried to save the markets in the past, and it only lasts for a certain amount of time. If they can't get the economy turned around within a certain amount of time, usually there's a big sell-off in the market. And that's exactly what happened in late 1929 after the initial sell-off. We had a big recovery, 4 or 5 months of recovery, and then big sell-off for a couple of years after that. Big bear market. Not to say that's going to happen this time, but we just have to be aware that we could get into a situation where we sell off big. And with all this government printing around the world, we have to look at gold and silver. And, you know, volatility really came into the gold market last week. Look at that. We had quite a sell-off in GLD, the ETF fund for gold, from 194 all the way down to 179, and I had explained that I was expecting a sell-off in gold in my last video just because we had this amazing run-up. That doesn't mean we're entering some type of bear market in gold. It just means that a lot of people were taking their profits. After all, a lot of analysts can't even find a really good reason for this sell-off. So chances are, in my opinion, this is probably just a lot of profit taking. This did coincide with a sell-off in bonds, which I'll show you in a minute. Now, there's a few scenarios that could happen in gold. I expect us to come up, possibly fill this gap, and then sell off to this area of support. Remember, we had this huge run-up in gold that was just parabolic, and that's the type of thing where you don't expect price to go in one direction forever. We broke this trend line, which was pretty much expected, because you can't expect a parabolic move to go up and not break a trend line, especially when you have a couple of gaps that need to be filled. The good news is we did fill this gap right here, and we still are sitting above some significant support. All of this consolidation right here and this upward sloping trend line is going to act as support. This blue trend line here, we're sitting above the moving averages. I just think this provides an opportunity for us to get long gold, because we could be in for a lot more upside in precious metals due to all of the government printing of money, currency around the world. This is going to not necessarily make gold more valuable, but in dollar terms, in currency terms, it's going to take more currency to buy an ounce of gold. That's just the way inflation works. That's not to say we're not going to have some sell-offs, we're not going to have some volatility. Of course, that goes with trading, and volatility is a trader's friend. All of this previous resistance now becomes support. One scenario is that we could see more upside, fill that gap, and then come down to some level of support, that upward sloping trend line. We also have the moving averages, and then we can look for some type of reversal to the upside and resume to the moon possibly. Now, of course, gold could go into a bear market here, but I just think it's unlikely, and the trend is still up overall. So the trend is your friend until it's not. If we take a look at silver, same type of situation. We had a big sell-off right here on August 11th. We went from, in SLV, we went from 27.43 down to 23.05 or so. Quite a sell-off. However, that's only 5 or 6 days or so of retracement. So it's not that much as far as time. Price is just catching up with time. If we draw in somewhat of a trend line from here to here, we could see a situation where price just moves sideways and eventually hooks up with this trend line or this moving average, which is going to continue to move up as long as it's sitting below price. We've also got some significant support right here at this level. That's exactly where price in SLV stopped, right above this. What was previous resistance is now acting as support. It's coming up to fill this gap. Now, when price does get up to the top of this area where it fills this gap, we might see some type of resistance, where we see some type of correction back to here, or maybe even a double bottom, and then resuming to the upside. We just have to assume that silver is going to continue to the upside as long as the trend is in that direction. Now, TLT is long-term government bonds, and when we saw gold sell off, we also saw bond sell off. This also coincided with the U.S. 10-year interest rate spiking up. Looks like we did hear some type of resistance. We don't know if this is going to continue at this point. But I think the overall long-term trend for interest rates is down, so you would expect to see some bounces here and there. It's just that when we see these bounces, we see a sell-off in bonds because they are inverse. We see an inverse reaction in precious metals. And the thing is, if we do see a resistance happen in the stock market when it hits all-time highs, we could see bonds and precious metals actually turn around and move to the upside at that point. It's just too hard to say what's going to happen, but there's a lot coming together right now this week where we could actually see a lot of things turn around. So this big pause that we had in precious metals and bonds might just turn around. Actually, we're seeing that bonds are in a long-term uptrend. And so this sell-off in bonds that we had last week hit some support right here, right where we're at, sitting at 163 on TLT. We could see the uptrend resume from here. But what you're going to need to do is drill down to a smaller time frame, say the 30-minute time frame. So we know we're sitting at an area of support. So this is an area on price where we want to look and see if we can't see some higher highs and higher lows and look for an opportunity to get long once the trend resumes on the lower time frames. On TLT, government bonds, same thing for precious metals. Once you start to see the uptrend resume on the smaller time frames in the precious metals and bonds, that's your opportunity to get long because we are in a long-term uptrend in both of those. It is so important to be cognizant of the overall breadth of the market, and the market breadth is getting thinner and thinner. So there's fewer and fewer stocks controlling the stock market. So you'd see the S&P 500, but you have 4 or 5 stocks. And the same thing for the Nasdaq, 4 or 5 stocks really driving the market. So let's go through the charts of the major cap-weighted stocks. Here's Apple. It's a bullish chart. We've broken out. We do have some gaps here that we could come down and fill, but even if we do, we've got a lot of support. Amazon still looking bullish above the upward sloping trend line. Microsoft, same deal, above the upward sloping trend line. Google's looking good too, above support and moving up. Facebook, same thing. We do have a gap here that we could fill, but we'd still be bullish even if that happens, sitting on top of quite a bit of support. Tesla is not a major cap-weighted stock. However, it has been on fire lately. We broke out here, had a big move up. Then we had this bull flag pennant, and we've just broken out of it. Here's Bitcoin on the daily chart. Here's this consolidation that we've been in, trying to break above this area. Let's zoom out and see what's going on here. Hitting some previous resistance. Keep in mind that we did break out of this previous resistance, so this is going to act as support. As you'd see, it did come down and retest on August 2nd. And if we do break out on Bitcoin, we could run up to this area of 13,220, 13,885, and then of course if we do break those areas of previous resistance, we could run up to the all-time highs right around 20,000. DXY is the US dollar currency index, and we're in this long-term bullish uptrend. However, it looks like we have broken through what was previous support, and now we're on our way down. If we continue to go down from here, that would be bullish for the precious metals. The VIX is considered the fear index, and it's basically the price of options on the S&P 500. It's a complicated formula, but basically we're sitting at 22 right now, and that reflects that option sellers are pricing in a move on the S&P 500 of about 22% up or down over the next 30 days. That's a little bit higher than where it should normally be in a bull market. If we go back over time, bull markets often see the VIX down here at about 12, 13, 14, under 20. As you can see, these lower wedge patterns often result in a spike in fear to the upside and a sell-off in the stock market. As you can see, when the VIX comes down, often there's a spike. Comes down, expect a spike. Doesn't mean it's going to happen anytime soon. Just need to keep it in mind that we could have a surprise sell-off in the market when fear starts to dissipate. Quantitatively speaking, when the VIX futures contracts are in contango, which they are right now, that's a bullish indicator for the stock market. And contango basically means that the near-term VIX futures contracts are priced lower than the further out VIX term futures contracts. So the difference between the first and the second month contracts, 23.29 and 26.94, is 15%. That's pretty steep contango. And then a 12% contango between the second and third month VIX futures contracts. That's also pretty steep. That's a bullish indicator. That's good news for the bulls. However, if we get a big sell-off, that futures contract will flip and we'll be in backwardation. That could happen at any time. A couple of things we need to keep our eye on this week as we trade. Tuesday, 8:30 Eastern Time, building permits. Going to be important. Also coming out Wednesday, the crude oil inventories and the FOMC meeting minutes. And then on Thursday, we need to keep our eye on those initial jobless claims, 8:30 Eastern, along with the Philadelphia Fed Manufacturing Index. All right, traders, so that's where we stand. We could bust through these all-time highs and then after a retest, shoot to the moon, or we could pull back to some major support, which I think looks like right around 32.75. Where do you think the market's going from here? Leave me a comment. What do you think? What's on your mind? Also, hit the like button if you like these kind of videos. And also, make sure you subscribe to the channel and hit the notifications button. That way, you'll get a notification every time I put out one of these videos. Have fun, guys. Have a great week trading, and we'll see you next time.